Amazon just released their latest quarterly figures. The stock is down about 4 to 5% because why not, right? In the last couple of days, I mean, we've covered plenty of companies, great earnings reports, nothing really to be afraid about. But guess what? The stock market is in a mood where it just doesn't care. Mr. Market is not in the mood, is not in a forgiving mood. Let's call it that. Because if you miss any metric, whether it's 0.1% or 1%, doesn't matter, you are going to go down. Now, on the flip side, I do have to show you that in the last 3 months alone, Amazon stock is up over 40%. I mean, since the elections, most of these tech companies are up quite a significant amount. So, okay, it's earnings season. I know there's a lot of overreaction. We've had that DeepSeek Monday, we've had the tariff Monday, and now we are having, Mr. Market's mood after each and every earnings report. But all in all, what's the big deal? Now we're back at prices, not seen since 2 weeks ago, a week ago. So I wouldn't really panic. If you can add more to amazing companies, to great businesses, why should we complain? So let's discuss Amazon's result in this video. I also wrote down a couple of comments that were mentioned during the earnings report. By the way, if you're interested in an ELF video, I know ELF is down 20+% or so after hours. If you want me to cover that, let me know down in the comment section below. On Friday, there is, I know I promised this a couple of days ago, Novo Nordisk and Eli Lilly. That video will come out on Friday. So if you enjoy all of that, hit all the buttons, would really appreciate it. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Okay, so as always, Consensus Gurus here with the amazing overview. So as you can see, for the quarter, mostly beats. We do have some small misses. So like I said, AWS missed by 0.1%, and it's like, oh, all hell broke loose. No, it's just a 0.1% miss, which also means that all of them, I mean, Azure, Google Cloud, and AWS all had a small miss and also a small deceleration in growth. We're going to talk about that in a second. International did also miss by 1.7%. Gross margin, it says here a miss, but it's 87 basis points, so really not that much. All the rest here pretty good. Operating income, operating margin, AWS operating income beat by 1.9%. I mean, this is just an amazing business to have. Then yes, if you look at Q1, revenue did miss quite a lot, 3.4%. There is a reason for that as well. Operating income missed by 12.6%, and so operating margin is a miss of 110 basis points. Now, with regards to guidance, the miss here can be explained as follows. So net sales are expected to be between $151 to $155.5 billion, or to grow between 5 to 9% compared to the first quarter in 2024. This guidance anticipates an unusually large unfavorable impact of approximately $2.1 billion or 150 basis points from foreign exchange rates. We've seen that with other companies as well. Now, let's be honest, even with that $2.1 billion hit, they would still have missed the consensus number. Of course, it would have been a smaller miss, but it would still be a miss nonetheless. But if we're being honest here, I don't really care that much. Anyways, looking at the overall business. So again, a record quarter. And yes, if you see those bumps here, it's because Q4 is usually the strongest quarter, holiday season and all of that. So this is basically it. And I mean, this is just an amazing business to own. Amazon, by the way, is my second largest position in my core portfolio. And if you look at the fastest growing segments, maybe I should rephrase that. If you look at the segments that have the higher margins, those are the fastest growing segments. So that's advertising, that's subscription, that's AWS, and even third-party seller services. So there is here, I'll just tell you the growth rates. The online stores that grew 7%. Then we have physical stores that's up 8%. With regards to third-party seller services, up 9%. The growth rate here did come down in the last couple of quarters. Then with regards to advertising is still growing 18%. True, a bit slower than the previous quarter, but still, I mean, $17.2 billion in advertising revenue. That's just amazing, growing 18%. With regards to subscription, about the same growth rate as before, slight deceleration here, 10% year-over-year growth. Then with regards to AWS, that has grown 18.9%. Previously, that has grown 19%. So it's about the same. But I mean, AWS right now, look at the annual revenue, over $107 billion just from that business alone. It's truly remarkable. I mean, AWS business alone is probably worth $1 trillion, right? $107.5 billion in annual revenue and growing quite rapidly. So yeah, overall, what we have seen in the last couple of days is this: AWS, Google Cloud, and Amazon Cloud revenue all seen a small deceleration quarter over quarter. I know it says here 19% for AWS. It was 18.9%. Okay, I know, not such a big deal, but still, those are still amazing businesses growing quite rapidly. And then looking at operating income, if we look at North America operating income since the March quarter of 2023, that has continued to improve. I mean, last quarter, amazing, $9.25 billion in operating income. Internationally is starting to turn a profit, so that's contributing finally. So that's great. With regards to AWS, I mean, yeah, just amazing, $10.6 billion. But I would like to say here, and this is something that they mentioned during the earnings call, margins will stay lumpy. As you see, 36.9%, which is down from the 38.1% before, but still higher than a year ago. Switching to what was mentioned during the earnings call, so they said the following: AWS chip Trainium 2 are 30 to 40% more cost effective than NVIDIA GPUs. With respects to AWS, it's hard to overstate how optimistic we are. With regards to capital investments for 2025, that should be more than $100 billion. In Q4 alone, CapEx was $26.6 billion. Most of that was towards AI and AWS. They were asked about, are they supply constrained or not? They said the following: if they are going to spend more capital, that's because it makes sense for them. That's because there is more demand. And so, yes, they would have liked to grow much faster if they were not constrained, which of course is always good to hear. And that's the comments that we've been hearing in the past couple of days from the other players as well. With regards to that DeepSeek moment, they said the following: cost of inference will come down drastically, which will be good for customers and good for Amazon as well. They also put the example of the cloud business. At first, it was expensive, then as cost is coming down, that does not mean that it's not going to be a successful business. No, that just means that more and more people could start building on top of that. And that's exactly what we're going to see with inference. So yeah, there we have it. To conclude, looking at the stock right now, it does seem like we are under the 20-day moving average. The 50-day one sits at $222 and the 200-day one sits at $196. Before the earnings report, we were slightly overbought. I mean, we were at all-time highs, so a little pullback wouldn't hurt anyone, right? So all in all, in my opinion, another good quarter by an amazing business. Stock market will do what the stock market will do. In the earnings call, I got the necessary commentary to know that things are doing quite fine. 2025, all of these big players are still going to invest quite a lot. Yes, I know they said that Trainium 2 more cost effective than NVIDIA GPUs, but remember, most of them, especially with the likes of Amazon and Google, even Meta, when they talk about their own chips and all of that, it is most likely for internal workloads. For external ones, they're all still going to buy NVIDIA Blackwells and Rubin, etc., etc. It's all about optionality, so all of them will still offer those GPUs, those solutions, just so we're clear. But yes, it is true that all of them are working on their own types of chips to reduce the dependency on the likes of NVIDIA, which maybe in the future might reduce NVIDIA's margins. Could be, but right now, I don't think there are any signs of that happening. So yeah, all in all, pretty good quarter. Very happy to be an Amazon shareholder. Sometimes it's okay to just stick with the giants and let them do their thing. Especially right now when we don't know who's going to be a winner, who's going to be a loser. Picking those giants, I think, is a safe thing to do. So that's about it. Again, if you would like to hear more about the ELF earnings report and call, let me know down in the comment section below. Like, subscribe, do all of that, and I see you all in the next one. Bye-bye.